GM everyone, welcome to another episode of Investing Analysis. Let's get started. First of all, the signals we are still holding 72% cash and 28% BTC inside our portfolio. Nothing has changed in the last 24 hours except of a BTC trade that we took inside our Telegram Twitter. We were long above the range high, we're expecting for higher prices, but price failed to hold above this range high and it went straight lower for our stop loss, which is perfectly fine. Our long term, mid term bias has not changed yet. We are still bullish, expecting higher. And what about this fucking trade? We will be buying, we will be longing again after confirmation at the mid range, right? So, nothing to worry about. So, let's get into the charts. First of all, the GLI gap above the current price, M2 correlation, the price indicates bullishness. Let's get into the on chain data before dropping a buy, specific bias, right? First of all, war, a lot of speculation is running, a misinformation is running inside the Twitter, right? But the main question for the crypto investors, traders must be, does this war increases the liquidity or reduces the liquidity? And the answer is the wars always increases the liquidity. And why is that? Because wars are very expensive. They increases inflation, which keeps the interest rates higher. And then the government needs to pay money for that, right? To pay that money, the government simply issues more debt, and then banks like Fed ends up buying that specific debt that increases liquidity in the market, right? So wars may be short term effective to the market. You may see small price movements in the short, very very short term, but in the long term, this is fucking bullish for the market, right? So here's the chart. I dropped the same chart inside my Twitter also. Make sure to check it out. So now the on-chain indicators, first of all, the Bitcoin sentiment, vote up or down. This is a very correlative indicator with the price. I posted the same indicator inside my Twitter as well. You can see the white line. This indicates the price of BTC, and this green line indicates the optimism amongst the traders. This indicators basically tells you how traders feel about the price movements for the future. So when the green line is down, this means a lot of traders are expecting lower prices. The level of optimism among the traders are very, very low. This means disbelief in the market, right? So currently the green line, you can see it's at very low level. This means none of those traders are expecting higher prices, which is very, very bullish for me, right? Same, you can see same data on this indicator, Bitcoin futures power 30-day change, which just shifted bullish. This is highly correlated with the price, and whenever this shifts bullish, this results in higher prices, right? Similarly, the funding rates on the Velo data on the daily and weekly time frame, as we analyze this every single day, it's still negative, quite negative, right? So this indicates still disbelief in this rally. Lot of traders, almost 90% of those traders, are expecting lower prices, which is perfectly fine and good to see. This rally is now shifting toward the spot rally, which is good to see. Yesterday it was in here somewhere in the leveraged section. It's still in here, but it's trying to shift into spot rally. Will be nice to see, and we'll be monitoring it very very closely, right? And again, OI building up, shorts are building up in market. There can be short squeeze in the very soon. Can't say in the very very short term because I don't have highly speculation of bullishness in the short term. And why is that? Because price, if you see this technically, I'm not a technical analyst, but if price breaks this range, the ultimate target would be this mid range, first of all, right? So this is the zone where I'll be looking for the for some trades inside my Twitter and Telegram as well, right? So it broke out this range, break down this range high, and whenever price does this, it goes towards the mid range, right? We'll be at least expecting 66,200 in the very short term before going high, right? So these two are the zones, 66,200 and 65,000 basically, right? So we'll be expecting for the price to come in here so we can buy some we can long some inside our futures account, right? So nothing changed in our bias. We are still expecting higher prices, but in very short term, they may target more retail traders before going higher. And whenever does not matters today, tomorrow, after 1 week, whenever this goes higher, this will be going very very fast. It won't give you any opportunity, right? So that's why we are allocated inside our portfolio as well, and inside our trading portfolio, our futures portfolio will be trading this when it comes in these levels in very short term, right? So that's enough for today. I hope so it's easy for you to understand. Make sure to do your analysis, do your research before taking any trade or following any trader, right? Thanks for watching. It's enough for today.